Welcome back to Power Lunch, Southern Africa. We are really at an interesting part of our journey in the markets as we wait to see the conclusion of the elections tomorrow. And this plays a key role as we look at the economic outlook and how the decisions made tomorrow will have a great impact on those. So the next 2 weeks actually are quite critical as well. Joining me is Maarten Ackerman, Chief Economist at Citadel. Maarten, thank you for making the time. We do need to really have one thing at the back of all conversations, the need to fast-track policy and provide policy uncertainty at the end of the day. Unpack for us what is critical in these policies that needs to be kept in a manner that will benefit the economy going forward.
Yes, thanks for the opportunity. I think that a lot of the policy that's already on the table is probably the right policy. It is a matter of making sure that we get to the business of executing and implementing. I think some of the biggest structural issues that preventing the economy from getting to capacity growth is what we've been spoken about for the last couple of years. That is our logistical network, our infrastructure, failing infrastructure. We need to fix that ASAP to actually enable the economy to actually grow faster and address the social issues that we are facing. So fortunately, as we speak, it seems like there's some improvement on the electricity side, but we're probably not out of the woods yet. And now the next one is obviously what's going on in our ports. Just earlier this week, we had the global report that a harbour like Cape Town is right at the bottom of about 410 harbours all around the world. So that's not helping. So the policy need to address the last decade of not focusing on keeping up our infrastructure and logistical networks and fixing that to ensure that for the next couple of decades we can actually benefit in terms of getting the economy back to capacity growth.
And as we've seen in the previous year, the president has really fought hard to push for private-public partnership, really relying heavily on corporate South Africa and the government to work together. How do you think the balance is going to be struck between pro-populist and pro-business parties going forward?
Yeah, well, I think, if you just look at the previous administration under the leadership of President Cyril Ramaphosa, one of the biggest things that he's been driving is to give a ticket, if we can call it that way, back to the private sector. So there's a lot of opportunity for private sector now to start playing a bigger role because previously they weren't allowed to do that. If you think about the cap on electricity generation, now those kind of constraints are lifted. So nothing prevents the private sector to actually get their hands dirty and start fixing a lot of these issues that we are facing. The benefit is that for private sector, there's a profit incentive. They definitely want to fix this to, for example, get their goods to the harbors, to export that and to import what they need to run their business. But those things don't happen overnight. So even if that door's been opened over the last couple of months, it will take time, and it will take time before we see the results. Now, also, we're standing at the watershed. In the next couple of days, we will know who is going to be the next president. And more importantly, after that, who will be in charge in terms of the different departments, again, in terms of taking control of policy and executing that. And you've mentioned pro-business, pro-populist. That is going to be key in determining how quickly and efficiently we can implement some of these policies to actually get the economy back on track. And if there's more political gridlock, unfortunately, we've seen that with some of the coalition governments we had in Gauteng and also in Tshwane, then it's very difficult to actually move forward and implement some of these very urgent kind of decisions that needs to be made.
And I think when we look at the performance of the economy as well in the last period, agriculture seems to be one of the ones that have really come up and have done better. How are we going to help to sustain the GDP per capita growth that we need to see in this country? What are the areas that can seriously be unlocked to just free up and ensure that we are weathering this current tough market in a much better way?
Yeah, I think the first quarter numbers talk to an economy that's really in a wait-and-see mode. That was obviously before the elections. If you look at high frequency data like our PMIs, pretty much the same kind of signal there that there's not a lot happening on the ground. Agriculture did quite well in the first quarter, but we know that that's a very volatile quarter as an industry. Very much depend on also, weather patterns and what is happening on the ground. And despite the very strong performance from agriculture, it's only 4% of the economy. So unfortunately, a great agricultural sector industry, and we've got that over the last couple of years, that's not going to save the economy in terms of more sustainable growth. It plays a role, but it's not good enough. Then if you focus on sectors like construction, manufacturing, and obviously the mining industry, that's the bigger sectors. That's really the sectors that are able to create sufficient jobs to actually reduce unemployment in this country. But those are the sectors that just not getting off the ground. And the reason for that is back to our earlier conversation. They're very much reliant on the failing infrastructure. They need the ports to operate efficiently. They need the trains to run. They need proper electricity. So back to the point that we need a government that can execute fixing those constraints. And then those sectors will be able to pick up speed and with that start to create sufficient jobs and pull us out of this, what you've mentioned, per capita recession. Over the last couple of years, we battled to have 1% growth and population is growing 1.5%. So the number of people are getting more and the size of the economic cake is really keeping up. And that's a real challenge that we need to fix.
I was actually going to ask you a question. You've partially answered it. Really, when you look at the current situation, when you look at the past, what do you think the outlook is? Is there anything else that you can add on to what can we look forward to for the year 2024 going into 25?
Well, I think for the second half of this year, at least the election uncertainty is behind us. And we know that the political dust seems to settle and then, everybody start to focus again on the daily activity and what is at hand. We already see, if we look at the markets, that the rand is taking a bit of a breather. The bond market sell-off after the election is pulling back. So a lot of that's already starting to normalize. But again, from a longer-term perspective, I think the sooner we can get whatever form of government that can work together and then make it clear in terms of what the action plan is in terms of policy and execution, that will bring with that confidence. And what is needed right now is, as a leading factor, is more confidence in the consumer side, the business side and investment side, so that a lot of the companies are actually willing to start to proactively reinvest to fix these structural issues and then for the economy to get on track. Also, I think what is important is that probably in the second half of this year, it seems more clear that there might be a point where we start seeing interest rate cuts, definitely globally. We already saw a cut at the ECB, European Bank, after the inflation data in the US this week and communication from the US Central Bank. Second half of this year is probably going to be their takeoff as well in terms of starting to reduce interest rates. And that implies pretty much the same for the South African Reserve Bank. So back to our first quarter economic data, it was very clear that the consumer is bleeding. And I think any relief towards the end of this year in terms of potentially seeing some rate cuts will be a welcome relief for most of the consumers in South Africa.
Thank you so much. Really an insightful conversation and giving us a good context of what's happening and what it means from an economic perspective. Thank you so much, Dr. Oh, I called you Doctor there. Nonetheless, you can have the title. Maarten Ackerman, Chief Economist from Citadel. Thank you so much. We'll catch him again next time. Let's take a quick break as we get ready for our next guest. You're watching Power Lunch.